What's up, everybody? Welcome back to RoyalBluFX. I know it's been a while since I ever did a video, so we're back, obviously. In today's video, we're going to talk about what causes the extension and retracement, all in this video. It's really important to know what causes the extension and retracement, because knowing this, it'll give you enough leverage to know how to position yourself in the markets. Also, if you guys haven't heard, we've released our course about 2 weeks ago, so whoever's ready, join us at RoyalBluFX.com to start today. We also hold 3 consultations for 3 lucky winners every week, and here are the winners from the last 2 weeks' video, right over here. Go ahead and reach out to me personally at RoyalBluFX on Instagram to start your free consultation. If you want to win a free consultation, all you got to do is subscribe, because I will be checking, comment done, and then tell me what you don't understand about Forex. So without any further ado, let's begin with the video.
Nothing can stop me, I'm all the way up.
Alright, so why do extensions and retracements happen in the market? Alright, what is the cause behind extensions and retracements to occur? Right, that's what we're going to be talking about in this video today. Now, before we go any further, right, a lot of you understand and or see the extensions and retracements in the market, but don't really know why they happen. All right, this video will actually try and help you to see why they happen and what you can do in terms of maybe a potential entry, maybe a potential setup in the market that you can be building around these extensions and retracements, right? So without any further ado, let's begin. So as we see here, we have a diagram in front of us, right? We have an uptrend and a downtrend. You can see again, we have an extension, retracement, extension, retracement, extension, retracement, right? And so forth and so on, right? And in a nutshell, the reason why extensions and retracements happen is because they're after liquidity, right? If we understand liquidity, you can actually refer to my liquidity videos right up here. You'll see a link up here, you know, a banner going up over here. In a nutshell, the markets go after liquidity. All right. If we understand what liquidity does, then we can understand why retracements and extensions happen. Okay. So when prices are extending to the upside like this, as you can see, all right, there's liquidity at every high and every low. So in this case, there's a high here. The price extended all the way up like this, took out the liquidity at this high. All right. There's a lot of stop orders right at this high. So this extension just took out all the stop loss, right, and was able to retrace the market, right? The market was able to retrace based off of this high's liquidity. Once that retracement has happened, inside now there's what's called internal liquidity. Inside in here, there's liquidity that's forming internally, where prices now will use all that liquidity to push that extension to the upside. Okay, so I don't know if you were able to catch all that, just what I was just saying right now. Okay, but let's look at it again here. When there's another extension, okay, when the reason why there's an extension that's happening is only because there was a cause in here. This liquidity, internal liquidity, caused this extension to push to the upside. Okay, and same thing goes for this retracement now. When there's a break of structure happening, and there is this liquidity right at this high here. Okay, there's a lot of stop orders right at this high. So therefore, this retracement was caused based off of this liquidity here, based off of these all of these stop orders, right? Same thing happens again. Another extension occurs, right? Where there's a retracement, there's internal liquidity, there's an extension that happens in the market now, and now it's taken out the external liquidity. It also took out the internal liquidity, right? And prices just do this over and over and time again, right? So notice what's happening here. When prices break this low here, right, we have a form of a chalk right here. Prices break this low, took out this low's liquidity. Right here, there's this retracement, right? Now we can see that the change of character has occurred here, and that prices are retracing to the downside. So now we can confirm to say that this is our internal liquidity, this is our external liquidity. So notice when prices are pushing to the downside, it's taken out this external liquidity here, all the stop orders, right? Everyone that's buying, actually it's not from this low, sorry, it's from this low right here that we just broke. This low's liquidity by this move, right? And there was a bunch of stop orders right over here and then prices retrace now, taking out the internal liquidity. Once that internal liquidity has been taken, we can see that this extension starts to occur based off of this internal liquidity. That was the cause. This extension's cause was based off of this liquidity, internal liquidity, right? Now when prices break below, notice that we just took out a new low liquidity, okay? So, and oops, excuse me, right there. Okay, so once this low has been taken out, you can see that prices retraced, excuse me, not right there. Prices extended, right? Took out this low, right? And this extension was caused by this liquidity. Now, this retracement is caused by this external liquidity, right? And it's retracing the market to the upside, right? Creating more internal liquidity. Once that internal liquidity is taken out, then there's that extension happening to the downside. Now, it's taking out this low's liquidity and also more liquidity from this side. Excuse me, what is that? There we go, right? It's taking out another low right here. So we're taking this low's liquidity and this low's liquidity, okay? There's a lot of buying orders right here that are set here, okay? Stop loss orders, right? And then essentially the market just goes down here, takes all that liquidity, right? And then pumps the market back upwards like this. Now this is our retracement, right? So all this external liquidity here is being used by this retracement. Okay, this retracement is pushing up based off of these liquidity, creating more internal liquidity here for now this extension to push to the downside just like this. Okay, it happens all the time and time again, right? We have another break of structure now. Okay, there's a bunch of buyers that were here buying, pushing price to the upside. This extension just took out all this liquidity. Now what do we expect from here now, right? We expect another retracement, right? For price to continue to the downside until price breaks structure like this. If price ever breaks structure like this, now we're looking for prices to reverse, right? We're looking for that change of character. We're looking for this. Now this would be considered as an extension where prices extend to the upside like that, right? Taking out this high's liquidity, right? And all those stop orders here, right? And then retrace back and filling up all these internal liquidity to push price to cause that extension to the push to the upside. All right, so let's go on a live chart example. I want to show you how this looks like on a live chart example, and you can probably get a full sense of understanding of how the market moves on a live chart. All right, let's go here, right there. Okay, right here. All right, so let's go from this high here. Okay, we can see a change of character has occurred. All right. And then from this change of character, we can see that there is an extension that has happened in the market. Now we have to know what caused this extension to push to the downside, right? Well, it was this internal liquidity in here that caused this extension to move to the downside. You can see all the way to the left, we have this low and this high here. This low, there's a bunch of stop orders right here. All right, stop loss orders, right? And then so is over here as well, right? You can see that we had a double bottom formation. All this liquidity was taken out by this extension. Took out all this double bottom liquidity. You can also see that we have, I believe, yeah, it was this low liquidity as well over here. If you go draw the line over here, right? You can see this move here, this extension took out this liquidity and this liquidity. So there's some sort of there's an idea here, a theory, obviously, that prices should retrace back up to the upside based off of these liquidities that were taken out, right? So once prices retrace, what do we expect? Well, this move, this retracement, was caused by this liquidity and this liquidity, right? All right, and that's why prices move to the upside, right? It may not be a full extension or a full retracement, right? But it is a form of a retracement, right? It's a reaction in the market. That's what we call it in our trading academy. Okay, this is just a reaction. It's not a full retracement. It's just a reaction in the market. So once this happens, right, there is internal liquidity creating right there, and then all of a sudden, this internal liquidity that the market just took. The extension happened, okay? The only reason why this extension happened was because this was the cause. This liquidity, internal liquidity, was the cause of this extension, okay? Once this extension has happened, I want you to see what happened here. We just broke a new low. there was a bunch of stop orders right here, stop loss orders, right? So there were stop orders there and more stop orders here. Okay, as you can see, this extension just pushed so bearish, right? It took out this low, took out this low, took out this low, and this low. So there's a bunch of liquidity here. This is called a trend line liquidity right here. Okay, let me just make this a little bit more neater for you all. Okay, that's our trend line liquidity right there. So price took out this liquidity here and this liquidity. Okay, these lows. And now only to find out that price should what? Retrace. Okay, we know that that retracement that's pushing to the upside was caused by this liquidity in here. Okay, and you can see obviously and evidently here that price is doing a full retracement up to an area of supply right over here, right? And once that retracement's happening, now we have to expect and see to ourselves where is that next liquidity. Okay, we're looking for that internal liquidity to push price to the downside, right? It's all the way in here. Okay, if this high wasn't broken like this, all right, then if this high here is respecting this high, right, this retracement is respecting this high here, then we can expect that there's internal liquidity in here to look for prices to now extend to the downside, right, to push down to the downside. Notice again, when prices extend down to the downside, we take more liquidity. Okay, we take more of these stop loss orders, right? And this this extension was caused by this internal liquidity. All right, this retracement is caused by this these stop loss orders right here. Okay, like just like that, it reversed, right? It retraced. We also noticed we've taken more liquidity from this low as well. Okay, clearing out all the liquidity. Okay, if we understand the bank's intention in the markets, they're just about going after money, going after liquidity. We all know that liquidity moves the markets based off the banks' money, banks and institutions, right? So you can see that everything is taken out. Nothing is left, right? There's no scraps. Everything is taken out. Whatever liquidity you see is all taken out. Everything is voided out. We're looking for the markets to continue moving, to continue collecting money, right? Collecting stop orders, right? So again, notice this. We had this retracement. We created what? Internal liquidity. Again, for prices to mitigate an area of supply to push to the downside, right? This internal liquidity, this extension here was caused by this internal liquidity, all right? It just continues on and on and on, right? So once we get all the way down here, right, you can see that there's another retracement, another extension, right? We need to see, again, what is happening here, right? There's that break of structure. All right, there's all this liquidity here from the downside, all these buy order liquidity or buy stop losses, right, and pushing markets to the upside, right? So let me just kind of break it down a little bit with you guys to see sort of on a lower time frame if I can take all this out. I'm just kind of backing all this up here. Okay, there we go. I want you to see on not just on a bird's eye view, the way I've been showing you right now, but more so in a detailed format, you know, going on a lower time frames. Now seeing the liquidity a little bit better, because me just explaining it to you, seeing that there's a retracement, there's all this internal liquidity, you probably don't see the liquidity, right, is the way I do. So if we go here, let's go right here actually. Right here you can see there's this extension happening. We marked all that liquidity, all, you know, the current low, the current high, right? You can see that all this liquidity was taken out here just as easily as we can see it here on the higher time frame, like this. All right, now when all this liquidity is happening, we're expecting for prices to retrace, right? Notice how price is mitigating an area of demand, right there. Okay, when prices are mitigating that demand, taking all this liquidity out, we can just drop down to the lower time frames like this, right? And now you can look for potential buys, right, based off of that liquidity that was taken out from this side here. Notice when we have this area tap, you can see here our order block and our demand zone was tapped. So now we can look to see, well, okay, well, if we're looking for buys here, what are we looking for? We're looking for that change of character to happen, right? We see that there is there's a low, right? This high here. This low was just taken out, but this high wasn't taken out yet. So therefore, this price or this area is invalid, right? It's voided because prices didn't take out this high's liquidity, right? What we're looking for here is the change of character, looking for price to actually break the structure. Okay, we're looking for this low's liquidity taken out, this high's liquidity to be taken out to show that prices can indeed reverse and change character, right? But that's not what happens here. Prices continue bearish here. Look how prices just take out more external liquidity here, right? We're still within that major demand zone here. You can see that prices are going bearish still. There's no change of characters happening now. We're going to be patient, sit on our hands, and look to see what's happening. Notice we have a low and a high and a low here, right? So there's a high and a low and a high and a low. If we look at here, this move here that extended to the downside, we can see that these buying orders here, the stop loss orders, were just taken out by this move. All right, if we just zoom out just a little bit, notice what's happening here. Okay, right here actually, excuse me. Okay, you can see here we had this, oops, why is this happening? Excuse me, right here. Okay, we had a chalk there. More importantly, we had another chalk even lower. So there we go. I'm kind of going faster to show you guys everything, obviously. Here's a chalk here, all right? And then here's another chalk right there. So from this high to this low, right? This low to this high. We had two areas. So it's 1, 2, and 3, okay? Prices broke this low, right? To retrace a little bit. Took this low as well, right here. Right here, took this low, right, to retrace a little bit, and now here's that official break that has happened on a lower time frame, right? Okay, let me just zoom out here, and once we see that, once prices break this high now we start to change our direction of the market, right? We see that price took out this liquidity, we took out this internal, but now it'll be our external liquidity because prices are changing direction. We're looking to enter, right? And so once prices broke, once this extension went to the upside like this, okay, it was caused by, this extension was caused by this low's liquidity right here, right? And now what we're expecting is for price to reverse or retrace, right? To only take out internal liquidity. And you can see it here clearly. All right, there's a low and there's a high here. I'm sorry, there's a low here and another low. This low wasn't able to break this high here, therefore prices reversed, right, and came and mitigated an area of demand, excuse me, okay? And there's your entry right here, right? Once that market gets to this order block here, right, you can keep your order block zone like this, right? Extend your risk right here just a bit, right? And then now you can look to target the highs, right? Something like this. All right, let's extend to the upside right there, right? Something like that, right? You can see here we were almost taken out just by a hair. Excuse me, why is this not cooperating here? Okay, you can see here that in this area that we were just about almost taken out by a hair, right? This goes to show you obviously how this works, right? It's very powerful. Now, why did this retracement go up, right? That's what we want to know, is why did it go up? Well, the only reason why it went up is because we just took out all this liquidity. And as we understand here, liquidity is the way to push the markets up or down, right? Liquidity moves the markets. So we're going to go with the intention of where the liquidity is taken out for the prices to reverse or extend, right? So once prices go all the way this high, right, we can understand that there's internal liquidity in here on the higher time frame, right? When there's that internal liquidity in here, now we have to find out where that internal liquidity is, right? You can see it everywhere, right? There's our current high, this is our current low. You can see it here. Okay, you can see it from here to here. Okay. All right, so there's all this liquidity that's happening here, and there's our current high right there. There's where your next area for entry, right, to look for. Once we're at this area, you can zoom in here, obviously, and now look for your change of character, right? Where did that change of character happen? There's a break over here, right? And there is a break over here. Let me check here, right there and here. Okay, and there's our low, right? So we have a change of character from this high to this low here. Okay, and we're going to be waiting patiently for price to either get there, or we're looking to obviously take advantage of this extension to the downside. Now, sometimes when a change of character comes, right, it doesn't immediately come back to an area of supply like this to push prices down, right? But you can clearly see what is happening here. We had right here a low, right, and a high, right, another low. Oh, actually, I see it now. Excuse me, guys. See it right there. Let me just get this back out of here. Okay, take this out. There we go. We can see that there's a low, there's a high, right, and this is a low, and this is a high right here. So we did have that change of character actually happen if I marked it out correctly. I didn't quite see it right there, and then right here. Okay, right there. All right, and once this low's liquidity was taken out from here, right, we are expecting a retracement. You can see that liquidity was taken out by this extension, so now we're expecting a retracement, right? That retracement is happening here. All right, this is a flip zone that we call it in the market, that we see in the market. There's your flip zone, and there's your entry right there, right? Something like that, right? And then you look to target the low right here, right? Something like that. Of course, you can cut this risk a bit to about 0.5% right here. It doesn't have to be a whole entire 1% to kind of give your, your risk to reward ratio a little bit better. There's a 9.1% here instead of a 4.9% or something like that, right? So we can just cut it about 50% of the way just to save, save our trade in case prices are reversed against us. Okay, so that's how prices happen, right? And there you go. You can see that prices, you would have been able to smash this, obviously, right? Now it's not guaranteed that every low and every high is going to be breaking, obviously, like this extension, right? But it's safe to say that whenever you're looking for trades, just to target your current high or your current low, right? Let's continue from here, right? Notice again, we have extensions pushing to the downside. We can see that there's liquidity taken out here and liquidity out here, right? There's an area where there's an area of demand here, right here. All right, all this. Now we can drop down to this level and then now look for potential, buys, right? We can see that we are in a downtrend on a higher time frame, but we're in an uptrend on a lower time frame, or almost an uptrend actually. You can see that there's all this internal liquidity in here that needs to be taken out. You can see that there's liquidity right there. From this high to this low, it's actually right here, right there. Okay, so right here and right here, there's liquidity right here. So if prices should ever go up and take out this high here, then we know that prices are going to retrace and go push to the upside. So we can look for potential buys in this market, right? Let's continue, right? There we go. Liquidity was just taken out from this high here, and we do have a flip zone here. If prices should ever come to the flip zone, then it's going to come and tag, touch the flip zone and push prices to the upside. If not, you can just continue to the upside because it just took out liquidity, and this is a retracement in the higher time frame, right? Obviously, you can look for earlier entries all the way at this leg here, right? But we're not talking about entries right now. We're just talking about the sort of the behavior of why retracements and extensions happen. You can see that this is a respected zone on the higher time frame. And now that we're expecting a retracement, that we're only looking to trade a retracement in the market, not an actual extension in the market, right? So there you go. You can see that the order block or demand zone was tagged, right? This may or may not be valid anymore based off of how the market never touched, right, or respected. You can see here clearly on this area here that the high and the low was taken out here. So we have a flip zone right there, okay, and this is where your entry would have been, one of your first entries, right? If your entry is taken out, or if this is taken out, then it is taken out. But in this case, you can see prices are respecting that high from here, right? Something like this. You can do about 50% of the way, or 0.5%, and then target this low like this, right? Or look to target your main low at the bottom like this, right? It really depends on your preference. Notice how we had a reaction here, right, from this area, that when price broke above, came back, it had a reaction. Price didn't fully extend to the upside. It was just a reaction only because on the higher time frame, this here, on the higher time frame, we see that prices are bearish here, right? They're not bullish. And we're just catching a retracement in the market after all that internal, this liquidity right here, this external liquidity was taken. All this liquidity here, all this liquidity here, right? So that's why we understood that price should push to the upside and then push bearish here now. So we're not fighting against the market. There we go. You would have had a beautiful TP on this trade, right? Something like that. All right. So let's continue up here, guys. As we see, let's actually go all the way to the upside, right? To the bullish trend here. Okay. I want you to see how this happens, how this works. Okay, so as you can see, we're all the way down here at the lows, right? You can see that prices, again, are breaking this high. We had a low broken here, so liquidity was taken from the low here, all right, to push prices up. And then once prices broke this, prices broke this high here, you can see we had this extension was caused based off of this liquidity in here. Okay, all the orders were just taken out from here. Look at all this liquidity right here, internal liquidity now. Okay, we're considering this is the internal liquidity only because prices broke a new high here. So this extension was caused by this internal liquidity. Once this price broke over here at this high, all this liquidity, this is internal liquidity and this is external liquidity. All this external liquidity over here, as you can see, this area here and this area here, okay, was used by this extension. This retracement was caused by this area here, okay, by all this liquidity to retrace all the way backside. All right, once this retracement happens, I want you to see what's happening here quickly on the 15-minute, okay? You can see all this internal liquidity right here forming. So this gives us a big speculation that we can look for potential buys here, right? Prices will tap our demand zone. We would look for that chalk, right? Our famous chalk, right? You can see that there's a chalk. This liquidity, the lows liquidity was taken, the highs liquidity was taken over here. Okay, remember there's a lot of stop orders there, a lot of stop orders right over here as well. All right, prices took the low, took the high, retraced all the way back, and then look for prices to mitigate this area of order block, right? This area of demand. So this is where your buy would have been here, okay? And so we do this, probably look for the high here, right? We would target this high or potentially this high all the way over here because we have a low and we have a high. So we'll be able to target this high very nicely. All right, we continue staying this trade until prices actually go and tap our high, right? So this is how it all happens, right? This is how it all happens. All right, notice how prices would have had our TP from there. Let's continue here. Okay, there we go, right? And all this is happening, the reason why all this is happening is because we're taking liquidity and moving it and transferring to the another side, right? The extensions and retracements happen due to liquidity, okay? So let me show you a few more examples and I'll end this video here in a second, in a few minutes. There's another break of structure here, as you see, we just took out, what is it, this high's liquidity right at this high right there. We took out that high liquidity, all those stop orders, right? We're looking for this low to be respected. Once this low is respected like this, right, we would drop down a lower time frame and then we'd see if this demand area is actually respected here. So we would drop on the 15-minute, right, and we understood that we just took out this high's liquidity. There is a retracement happening in the market, and then we see that there is a bunch of liquidity in here, right there, internal liquidity, right there, right there. Okay, and then prices mitigate, right, this area of demand, and then you can look for your chalk on the lower time frames. You can see it clearly here. We had a break of structure there, so here's our chalk. Okay, and then your entry would have been down at this low. We see that there's liquidity right there. There's your entry once again, and then we can look for to hold this trade to the upside, right? Probably somewhere at this high, or maybe even higher at this high as well. Let's see. Oops, you might have been taken out from there, which is no problem because we do see there's more liquidity forming. If that ever happens, right, there's not 100% chance that this is always going to hold, but if this ever happens, you know, you can see that there's more liquidity building right here. If we can zoom in here, let me just take this out. Oh, I see it here. I see it. Okay, right there. Okay, there's all this liquidity right over here forming. And price just took out all this liquidity, right, and pushed price up. We can start seeing that change of character again here on the low side. Right here, we have a break of structure here and a break of structure here. Okay, so our real entry would have been down here, right there, right, and look to target the highs from there. Right, we're going to be losing it sometimes, right? That's just part of trading. But just by understanding what liquidity is, that's how we understand where prices are going. All right, we just took out this lows liquidity here, right? We just took out this highs liquidity, right? And then there's your flip zone right there, and that's where we look to take the market and stay in until prices tag the highs, right? So, all right, guys, that's all I wanted to show you in this video. I hope this was very self-explanatory too. You know, I know I mumbled a lot, and if you guys ever have any questions, please do leave your comments in the section below. I really do appreciate you guys watching and supporting our channel. And without any further ado, I'm going to end this video here, so I am out.
Nothing can stop me, I'm all the way up.